Coming up in today's episode, Nvidia stock falls after the US government announces they may widen ban on AI chip sales to China. Apple close to becoming the first $3 trillion company in the world. Jay Powell signals more rate hikes are on the way. More trouble brewing underneath the surface. Volvo joins other car manufacturers in partnering with Tesla. And flying electric taxis are on the way. Welcome back to Click Capital, everybody, and happy hump day as we cross the middle of the week and a bit of a flat, mixed day here on Wall Street. We did see the semiconductor stocks come off on news the Biden administration is looking at widening export bans on high-end AI chips to China. And we saw crude inventory supplies drop a bit more than expected, sending energy stocks up. And there's still a strong bid on Tesla after news that Volvo is going to jump onto their supercharger network as well. And just before we get into the rest of today's news and charts, just a quick reminder for the next 4 days only, we're running a special where you can get all 20 of our custom indicators for TradingView for 50% off just a one-time fee of $197, and you'll get all the indicators lifetime access with no ongoing costs and the same indicators that I use throughout all these videos. All you need is a free TradingView account, and once you buy them they'll show up here in your invite-only scripts and you can add them to any chart you'd like. And that includes lifetime access to our popular stock fair value indicator, which is a first on TradingView, which gives you an approximate fair value price for every stock out there around the world. So this is a fundamental indicator. It looks at balance sheet items, business growth, revenue, and forward earnings expectations from analysts to give you what a fair price should be on a stock. And the idea is you want to buy stocks well below fair value and sell them when they get to fair value, and the opposite, you want to short stocks that are well above fair value and ideally cover them back when they're at fair value. And it was this indicator here that gave me the confidence, along with some of our other technical indicators, to call the bottom on Tesla back in mid-January. You can go back to my videos on my channel and you'll hear me say with confidence that we've seen a bottom in Tesla, and I was adding to my long-term position there, because if you look at our stock fair value indicator down the bottom here, it showed fair value at $182 a share, and we actually got down to $104 a share that day. And like I said at the time, it was very unusual to see Tesla trading at such large levels underneath fair value, and of course we've just come back up to fair value now with the indicator currently saying Tesla's fair value as at 241. And if you're interested, you can see the fair value on Nvidia is currently at 189. So according to our indicator stock fair value, the current price of Nvidia is 117% overvalued. And like I said, you can use this indicator on stocks all around the world, whether you're in America, Canada, the UK, Australia, Germany, France, Singapore, wherever you are, you can use this to get an idea of what a fair value should be on any stock you're interested in, small and large. So to take advantage of this special offer for the next couple of days only, head on over to our website, clickcapital.io/deal. And then once you're on this page, just scroll down past the indicator descriptions and just enter in your email and TradingView username and safely check out, and then we'll give you access to all 20 of our indicators. And any other indicators we bring out in the future, you'll also get access to 100% free of charge. So this is the best deal we're ever going to offer, so I highly recommend you take advantage of that in the next couple of days if you can. Okay, back on over to the biggest stories out of Wall Street today, and the one we're looking at, potential impact of the Biden administration widening export restrictions on high-end AI chips to China from companies like Nvidia and others. As this kind of economic Cold War with China heats up, and America wants to slow down the advancement of China's economy, military, and other tech capabilities. And so the market got a little bit worried with that. Nvidia finished down 1.8% today on slightly above average volume. And the semiconductor industry as a whole was one of the weaker performing sectors today, down almost 1%. But apparently not too many people are worried, including Nvidia's chief financial officer, Colette Kress. She said she does not expect an immediate material impact from any extension of US AI chip export bans to China. However, she said longer term it could represent a permanent loss of opportunities. However, she's telling everyone not to worry about it and there won't be any immediate material impact. Just over a month ago, she actually sold $2.5 million worth of Nvidia stock at a price of $406, along with a bunch of other Nvidia corporate insiders who've sold around $200 million worth of stock ever since we've had that earnings pop up. And Wall Street analysts are saying no big deal. As well, with this China chip ban, they're saying it's a buying opportunity. And we're seeing that in a few media publications, including Barron's as well today, saying buy the dip on Nvidia on any bad news. And overall, Wall Street analysts are still really bullish on the stock with a buy rating and an average price target of $458, which is about 11% higher than where we are today. And the parabolic move upwards in the biggest company in the world, Apple, continues with closing in on the huge $3 trillion market cap milestone. And we closed at $189 a share today, which gives it a 2.97 trillion market cap. And we'd have to close above 191 for it to hit that elusive 3 trillion mark. And I was just remembering about Apple stock. Some of you may remember this as well. A few years back in mid-2016 and 2015, around this period here, the stock price on Apple was pretty weak. And it was something like, 500-600 billion market cap. And a lot of people were saying, hey, it would never get to a trillion because, what's there to gain after that? No company in the world trades at $1 trillion market cap. And I think it was around this time that Warren Buffett started loading up on the stock in a big way as well. And I can even see here on our stock fair value indicator around this period, it had fair value at $55 a share, and it got down to the low 20s, and it was a very cheap valuation. And this went on for months and months. So this is a monthly chart, and it was just all over the media. Apple can't make it to $1 trillion. It's just too big. There's more downside than upside. And look what it's done since then. The stock price has gone from the low 20s up to almost $200 a share today. However, our stock fair value's got it at $124. So it's a great company, a great brand, really well run and all that. And it definitely deserves a premium over fair value, maybe even by 20 or 30%. However, at 50% premium over fair value, it might be a little bit overcooked up here. So I'm not buying it up here. And just looking at the daily chart, we've just put in a bearish 13 count. So we'll see whether that plays out. And it's had a really great move these last couple of months. This really parabolic tight uptrend, as we can see on our wave flow indicator, which has been green for the last couple of months. So still too early to call it a technical top here. We'd need a bit more of a topping formation. But for now, this momentum continues and it marches towards 3 trillion, which it'll probably close at tomorrow or Friday into early next week. Second biggest stock in the world isn't as strong though. Microsoft here on a bearish divergence and has been pulling back from its all-time highs over the last week and a half. Another news out today, BlackRock says these 5 mega forces are about to change how to invest. And obviously first is AI, the biggest story on Wall Street this year. The second one they said is the low carbon transition, which I'm invested in as well with long-term investments in the clean energy fund PBW and Tesla as the #1 clean energy brand in the world, as I believe the secular shift from fossil fuels to clean energy is probably the biggest investment story and societal change in my lifetime at least. The third is geopolitical fragmenting. So in recent years we've seen a bit of a pushback and reversal in the globalization trend after COVID came out from China and the political spill out from that. So a lot of Western economies at least are looking to become a bit more self-sufficient and secure their supply chains and at least diversify them away from China. The fourth is the aging population. All those baby boomers are going into their golden years and they have quite the large nest egg, which they'll be spending and should help prop up the economy as well. And that could be what's helping travel stocks and the like, even though we've got millennials mostly struggling, can't afford a house. The boomers are the direct beneficiary of all that. And so other things like healthcare and discretionary travel spending and that could be a trend that stays strong for many more years. And finally, they said a reshaped banking sector. And that's the spill out from the banking crisis we've seen from Silicon Valley Bank and what you could say was the first digital bank run that happened so quick, pretty much in under 24 hours, as everyone can just log on to their app and withdraw their money. So they expect further consolidation of smaller institutions, credit availability to tighten, and then also with new things like blockchain technology and cryptocurrency. While there's a lot of dodginess and scams in the crypto space, one good thing it has done is given some good structural competition to the traditional finance sector and keeping them on their toes and helping them to evolve a bit as well. And we heard from Fed Chair Powell today, and no surprise there, pretty much just saying what he's been saying the last couple of weeks. Inflation's still there, they still have to do more hikes, and the economy is still holding up for now, so there's still room for more hikes to be done. And Bank of America CEO predicts that the Fed won't hit their 2% inflation target until 2025. However, just like we have a bifurcation in the stock market price action with tech significantly outperforming much the rest of the market this year, we also have a bit of a bifurcation in economic data. As well, house sales and some consumer spending, consumer confidence, and the jobs market's all holding up. That's been contrasted by things like corporate bankruptcies, which is speeding up to recession levels. And we can see that in the 4-week moving average of bankruptcy filings actually moving up to COVID levels and GFC levels. And that's because of higher rates and now tighter credit after all the regional banking mess, which is still yet to fully play out throughout the real economy. Even the top end of town is slowing down a bit, and we can see that in the luxury watch market, with the watch index dropping about 19% in the last 12 months down to 2-year lows. We also had Micron come out with better than expected Q3 results today, a narrower loss than expected. CEO actually called a bottom in the memory chip market, but they still lost $1.43 a share. So still one of the least profitable semiconductor stocks out there. And like we've been predicting, another car manufacturer has jumped onto the Tesla charging network after we saw Ford, General Motors and a few others. Now we've got a large Euro maker, Volvo, signing an agreement that gives its electric cars access to Tesla's network of 12,000 superchargers across the US, Canada and Mexico. And Volvo, like many other European car manufacturers, shares are really cheap according to our stock fair value, 58% below. And this is similar to others like BMW, which I'm a long-term investor in. Shares are currently undervalued by 83%. Mercedes-Benz, 64% undervalued. Volkswagen, 72% undervalued. And Renault also 67% undervalued. And once again, the market loved that, marking up the stock of Tesla 2.4% at $256 a share. Still technically overbought here and on some bearish divergences, so we'll see whether these levels can hold. But fundamentally speaking, this is really good stuff for Tesla, as they pretty much own the infrastructure of the electric vehicle industry now, and the rest of the industry needs them to actually survive themselves. So you could kind of think of it as like a GM or Ford basically owning every gas station out there as well. That's kind of like the equivalent thing of what's going on with Tesla going forward in the EV market. Domestic crude inventories drops nearly 10 million barrels, but that only gave a small pop to the price of crude, and it keeps defending these mid $60 levels here. And the latest meme stock, Joby Aviation, is on fire today after they just got FAA approval to start test flying its prototype electric vertical takeoff and landing aircraft. They might eventually be used as air taxis, taking people to airports, above ground traffic, or making short commutes. And this stock is actually a SPAC, which got hit hard with the rest of SPACs coming out of 2021. And just look on the daily chart here, ripped up 40% on huge volume. 48 million shares, finishing near its high, just under $9 a share. But a look on the weekly chart and we're still below those levels when it first came back onto the market in mid-2021. There's just a quick look at economic data out today. Those crude oil stocks coming in a lot lower than expected, and the other thing, retail inventories, goods trades balance, and wholesale inventories all coming in as expected. And I'll be looking at those jobless claims tomorrow to see if they come in higher than expected, like we've been seeing in recent weeks. And then on Friday, the core PCE and personal income data, along with the Michigan consumer sentiment surveys we'll be looking at. Fed fund futures improving the chances that the Fed's going to hike on July 26th to just under 80%. Fear and greed index backed in the extreme greed zone at 77. Another quiet day in the options market, but still more people buying calls than puts. And dark pool traders still not showing a lot of interest here, with the DIX still under 50%. And corporate insiders not doing much trading this week, with sales just eclipsing purchases. Okay, back into the charts, and a pretty flat day here. S&P 500 pretty much finished unchanged. A little bit of a bump up in the Qs, and the small cap Russell 2000 was the winner, up almost 0.5%. Continued bump ups in international stock indices. Volatility still down on its knees at 13.4. Breadth holding up somewhat as well. Got the growth versus defensive sectors actually breaking out to new year-to-date highs today. High beta stocks as well moving back up versus low volatility, along with growth versus value just ticking up to new highs. And there's smalls versus bigs looking to find support. Where the market thinks the Fed will be on interest rates by December continues ticking up. We found 5.36 in the December Fed Fund futures contract today. TLT holding steady above its 50. Pretty good price action today in high yield bonds. Dollar looks to have bounced off its support zone. Bitcoin's still sitting at that $30,000 resistance. Bit of bullish seasonality coming in. We can see on our seasonality forecast indicator. Historically speaking, over the next 10 days, Bitcoin increases 5.32% looking back in history. There's the commodity complex as measured by DBC ETF, just sitting down at the bottom of its support range. And a bit of a pullback in agriculture commodities, now sitting at the 50. Over to stock sectors, and the winner today was the Clean Energy ETF. And this is the ETF that I'm invested in long term, and is actually the highest paying dividend yield out of the 25 plus sectors that I track, currently at 4.64%. And the losing sector today was gold miners, down 1.45%. Did a bullish 7 count here, and just like the price of gold, just been drifting lower here as risk assets have been doing really well these last couple of months. But there's still a lot of things supportive of gold, namely high inflation, geopolitical tensions, and historically low allocations to the precious metal in most big portfolios. And in other signs that the market is feeling more risky, we've got defensive sectors like utilities trading a bit weak. One of the losing sectors today, down 1.5% on volume. And we keep on coming down to test these support levels, and the more we keep testing it, the weaker it's going to get. So we might actually break through it this time. And the weakest stock out of all the mega cap tech, Google, actually found a little bit of support today, up 1.56%. Bit of a bounce back in C3 AI to its 50. And overall, pretty good day in the meme space. We've got Virgin Galactic up 9%, Carvana up 15%, Lyft up 6%, and Lucid Motors up 5.2%. And there's a look at Carnival Corporation up 8.81% today on pretty good volume. So you heard me speak about this one the last couple of days. They reported earnings. We initially sold off, found a dip buy, had a good day yesterday, and it's broken out again today. And that's taken Royal Caribbean. Cruises actually got up to 105 today, and I exited this one yesterday just above 100, which I was short, and I'm keeping an eye on this one. And just taking you out to the monthly chart here. So it's all-time high, $135 it got to just before COVID hit. And we had a bit of a resistance around the mid-90s levels in mid-2021. We seem to have broken through that now. And fundamentally, I still like this for a short if we do go into a global recession later this year, mostly because of the hole they've blown in their balance sheet since COVID. You can see here in their revenue absolutely fell off a cliff after COVID, and they've had to sell a lot more debt since then. So in 2019, they had total liabilities of $17.5 billion. Most recent readings just under $31 billion. So they've added about $14 billion in debt, almost doubled their debt in the last couple of years. And their debt exceeds their current market cap level. However, the industry has been doing well. They do have a lot of bookings. There's still a lot of retired boomers out there with cash to spend. And so the industry has been bringing in the bookings, even though they're still losing money. If we do get a recession or any geopolitical tension spill over into greater wars or any new stronger variants of COVID or anything like that come out, or just a recession, that could affect bookings. And at these elevated levels, I think they're vulnerable to a fall. However, I'll be looking now for it to get back up into this resistance zone around 120 to 135 near its all-time highs. If we can get up there in the next couple of months, I'll consider getting short the stock again, as I think it may even present an even better shorting opportunity at these levels. Now, for now, in the short term, it's got quite a lot of strong price action momentum, so I'm not going to fight it here, just going to sit out and continue watching it. One of the strongest stocks in the market this year, Super Micro Computer, had a nice little bounce today off its 50, up 4.3%. And there's Anheuser-Busch and Target still below their 50s. Carl Icahn's stock just closed above its 50 for the first time in a couple of months, ever since it's been fighting Hindenburg Research. And a little mixed in the banks out there today, as they still trade flat. Right, that wraps it up for today. Pretty mixed day in price action. As we can see in the VIX, the market's just not moving a whole lot. It is really flat, and that's why I'm still market neutral. And don't forget to take advantage of our deal to get all our indicators. I'll put the link below this video for this actual chart layout if you want this exact same chart layout as I've got here. First of all, just head to our website, clickcapital.io/deal. Purchase the indicators, and then once you've got the email from us confirming your TradingView account has access to our indicators, come back to this video and look for this link below the video description, and straight away in TradingView it'll load this exact same chart layout for you, exactly how I've got it all configured. And like I said, I've found these custom indicators just to give the best visual representation of the market, to help you technically understand what's going on. And of course, no indicator is perfect and works all the time, but just helps you understand where there might be a trading opportunity and where things might have got a bit too stretched, and just to help see the trends in the market, like our sector trends table indicator here. Easily see where each sector is relative to its 5, 20, 50 and 200-day moving average. So we can see there's a lot of bullish uptrends out there in the market, except for utilities and other defensive sectors like healthcare and gold miners still in downtrend across the board. Alright guys, that's it for today. Thanks very much for watching, and I look forward to sharing access with my own private indicators with you soon as well. Alright, we'll see you again tomorrow afternoon. Cheers.